Market volatility has spawned a growth in liquid alternatives investments during the past year, driven by the many unique benefits this asset class offers investors looking to diversify their portfolios beyond equities and fixed income. Unlike private investments in hedge funds, real estate, and other types of alternatives, liquid alts enables investors to gain exposure to these asset classes through mutual funds or exchange-traded structures, which offer liquidity, transparency, low leverage, and 1099 tax treatment under the provisions of the Investment Company Act of 1940. In this multimedia companion to Institutional Investors Alpha's special report on liquid alternatives, we speak with 4 leading providers about the benefits and risks of incorporating liquid alt strategies into a portfolio, what to look for when selecting a manager, and some of the new products being offered to meet evolving investor objectives. Michael Bernstein, Managing Director and Head of North America Business Development for Lixar Asset Management, says that a number of factors and conditions are driving investor interest in liquid alts.
Well, I think investors are generally fairly nervous at this stage. They may have enjoyed a pretty good ride along with rising equities, but now they're increasingly concerned about an equity correction, and they're also continually concerned about a possible rising interest rate scenario in the future. And they don't want to have a portfolio that's only exposed to equities or interest rates, and they're continually looking to ways of diversifying. And liquid alternatives gives them a way to potentially diversify while remaining quite liquid so that they can be reactive and nimble.
Rick Lake, co-chairman of Lake Partners, attributes the growth to investor demands for risk management tools, differentiated returns, and diversification. He notes that liquid alternative funds provide investors with access to a wide range of strategies typically associated with hedge funds, such as absolute return, long-short equity, global macro, as well as multi-strategy funds. Another benefit is their ease of implementation.
Ease of implementation is a hallmark of liquid alternatives. Unlike private funds, liquid alts are not burdened by cumbersome subscription documents, complicated K-1s, or onerous investor qualification requirements. Liquid alts are user-friendly like any mutual fund.
Christine Johnson, Managing Director, Alternatives Product Management at AllianceBernstein, says that investors should consider a number of things when investing in liquid alts.
It's very important to do your analysis when you're selecting a liquid alternatives manager or strategy. You need to assess the risk, the exposures, and your desired outcome from the investment. Another important consideration is governance, since there are a lot of new entrants in the market that don't necessarily have a long-term track record.
Rick Lake says there are benefits to combining liquid alts with illiquid alts.
With liquid alts, institutional and private investors can now invest across the liquidity spectrum. Liquid alts can complement less liquid alternative strategies, such as private equity or distressed investing. Liquid alts can be used to manage liquidity or meet capital calls within an alternatives portfolio.
Liquid alternative strategies can be designed to generate alpha, potentially higher returns, or beta, a reduction in market risk. Michael Bernstein says that new products are being developed in the space to offer both to investors looking for diversification.
New products are being developed that offer simple, low-cost liquid strategies designed to provide just the alternative beta component. An investor who's trying to diversify the portfolio in smart ways may look at those new offerings as potential possibilities for their portfolio.
Concerns over rising interest rates and duration risk are helping to drive demand for non-traditional or unconstrained bond funds, the liquid alts of the fixed income world, according to Rick Lake. These funds provide investors with access to hedging tools and potential additional sources of yield and returns. Rick says that multi-strategy funds are also an attractive option.
Multi-alternative funds can provide a one-stop, all-in-one solution for professionals and investors. They can serve as a core allocation in a balanced portfolio or as a foundation when building a blend of alternative investments.
According to Morningstar, there are now nearly 430 alternative strategy mutual funds with a total of $144 billion in assets. That's a dramatic increase from just a few years ago. With such a wide range of choices in liquid alts, investors should search carefully for fund strategies that complement their investment goals. Chris Bricker, head of alternatives at AllianceBernstein, stresses that fund manager selection is especially important for this strategy.
The complexity of these liquid alternative strategies combined with the fact that in many instances there's not a good benchmark, just raises the potential for a significantly wide range of outcomes, better and worse, and therefore the manager is critically important.
On the topic of performance, Michael Bernstein says that Lixer believes tying the management fee to performance leads to better outcomes.
Well, some products have a management fee without a performance fee component, but that can be a double-edged sword. We believe that a performance fee tends to align the interests of the manager with the investor, and it ultimately can attract a higher quality manager and sometimes higher quality strategies.
To learn more about liquid alternatives and to hear from all of the industry leaders who contributed to the report, we invite you to read the full report below or download the PDF and read it offline.